Market seesaws between green and red even as the Adani Group issues linger and uncertainty continues on the interest rate trend. Metals, realty and banks weak while IT ekes out some gains.
MSCI says it is reviewing the free float of Adani Group stocks and will make any changes with the periodic review of its indices today. Also, France's Total has put its hydrogen JV with Adani on hold pending an independent audit.
Cummins jumps on a strong all-round performance. Trent gains on strong retail sales, but a sharp contraction in margins hurts Piramal Pharma, while losses at its Indonesia unit tells on the restaurant brands Asia.
And mutual fund data for the month of January looks up, coming in at a 4-month high and above the 12,500 crore mark. Large cap see a 700 crore inflow after 2 straight months of money moving out. The SIP contribution sets yet another record at over 13,800 crores.
Dominance continues. CNBC-TV18 knocks out competition and emerges the leader on budget day with 88.2% viewership during the FM speech and 89.8% viewership through the budget day on the 1st of February. A big thank you to all our viewers. All right, so those were the big headlines of the day. Hello and welcome. You're watching Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor, Pavitra Parekh. So, Pavitra, it's like a yo-yo movement when it comes to the market. Yeah. In fact, the markets went down and then trying to recover at this point. In fact, if we really take a look at the low point of the day, it's over 50 points gain from that. But then the rigs are really changing every minute at the moment and yo-yoing between a tight range. 35 points cut on Nifty 50 at the moment, and Sensex, on the other hand, is marginally in the red. Bank Nifty is the strong underperformer in trade today, inching towards a 0.5% cut, while the mid caps are much more resilient, more on the flat line, but with a negative bias. When it comes to advanced decline ratio, it is slightly in favor of the declines. But when we really take a look at some of the stocks still showing in the green and Nifty 50 component, Bajaj Twins stand out, and some of the life insurance companies like HDFC Life, SBI Life doing well. And Adani, the uncertainty continues. We had a few days of green and now a day of red again for the index stocks of Adani Group, Pavitra.
Oh, absolutely. This is on account of course, what the MSCI had to say on, the Adani Group of stocks. So we'll get to that actually in just a minute. What's doing the worst perhaps today is the metals pack once again. We have been pointing it out. They've continuously been suffering losses. It's 13% lower for the year. But what's holding up is IT. And by the way, this is after we got a near 2% cut on the Nasdaq overnight as well. So yet, even in that situation, you have Infosys, TCS, HCL Tech, all of the larger names holding up with good gains. Some of the stocks which have been pretty battered in trade over the past few weeks. So the likes of the Bajaj Twins, you had, the insurance companies, the life insurance companies in particular, those doing well. So this is the weekly gain for the Bajaj Twins. Then this is for the insurance stocks, the life insurance players. Of course, they're still suffering cuts if I look at it on a broader basis. But HDFC Life for the week is up over 5%. You have SBI Life also doing well. And a lot of the new age companies up and about once again today. So whether it's a Paytm, Nykaa, Zomato, all of them doing quite well in quite a shaky market setup. So that's what's happening for the markets. But let's talk about these individual names now. It's also a lot about the earnings which have come through. Cummins India is trading at life highs. This after delivering a strong performance in the third quarter on the back of strong demand, as well as healthy growth in both the domestic markets as well as the export markets. So Vaishta is here with all of the details on this one. Vaishta?
Hi Pavitra. Well, as you rightly mentioned, Cummins has released excellent set of numbers yesterday post-market. In fact, the company has reported record quarterly performance driven by strong domestic as well as their export revenues. The revenues have come in at 2,180 crores, which are 12% above their estimates and 330 basis points above the estimates as well. Export revenues have jumped by 23% on year-on-year basis in the quarter, while the domestic sales were up 27%. The con call was held today morning, and the company is quite optimistic, saying that they will be comfortably be able to meet the revenue growth aspiration of 2 times the GDP in FY23. However, the company is also cautiously optimistic and watchful for the softening of the capex cycle. The margins were better in the past quarter, which is due to the better execution and supply challenges easing off, but the rise of copper, aluminium and steel prices are posing some challenges in the sustainability of their margins. Also, the company has said that as India moves towards 5G and consumes more data, the need for data centers is expected to be robust in the next 4 to 5 years. And at present, Cummins is a leader in the data center space. Also, there is a growth in the high horsepower segment, which was led by the demand from infra, from realty, from data centers, and the power generation segment growth was led by also the data centers, along with infra, hospitality and the manufacturing segment. Alongside, there were commentaries on a tighter emission norms in the ongoing decade with CPCB4 implementation, wherein the costs could increase as much as 50%, and the company is expecting to cover up this cost. They could take price hikes in the range of 30 to 50%. The export potentials from the industry segment are strong, especially in the marine and the construction markets. Also, the North American and the European, which are their export markets, are doing very well. The company has, though, not witnessed much market share gains recently, which is due to an insufficient capacity to meet their existing high demand. So all in all, the company has also said that they are cautiously optimistic from the short to medium term due to some supply challenges. Back to you.
All right. Thanks so much, Vahishta, for giving us all the details on Cummins. That stock is down 1.8% at the moment, has lost some ground since the morning trade. Now another stock in focus, and this one is holding very strong. We are talking about Trent, shining in trade. Over 7.5% surge is seen on that particular counter after the company has registered its highest ever quarterly revenue in the third quarter. In fact, let's take it across to Mangalam Malu, who's here with the details on what's so euphoric about Trent. Mangalam.
Well, good performance coming in on the top line from Trent. Remember, this is the company that runs all the West Side stores and the Zudio stores across the country. Also has a joint venture with Zara. So a big surge in their revenues is what we've seen. Over 54% jump. This, of course, comes on a low base and a high seasonal quarter. But, we did see some compression in their gross margins owing to the weakness that we're seeing in the input cost inflation environment, as a result of which the EBITDA has grown just by about 18%. Remember, same time last year, they had a lot of benefits in terms of rent waivers, etc. as well. All of that has come back in terms of expenses, as a result of which there has been some margin compression from 18% to 14%. The net profit, however, has grown by 36%, further aided by other income, which has doubled too. But importantly, the West Side same-store sales growth for the third quarter has been 17%, and that is what the street likes, notwithstanding the margins, notwithstanding the valuations as well. But valuations and urban slowdown may be a bit of a concern, and that's what Jefferies says too, because after this move today, the stock trades close to around 77, 78 times one-year forward price to earnings. It's off its 52-week high by almost 15%, but then again, still at elevated valuations. Today, the street likes these numbers. Let's see when the valuations come in the way.
All right, Mangalam, thanks a lot for taking us through all of the details there on Trent. The stock is up over 7%. But with that, let's now move on and talk about the Adani group of stocks, which are in focus following the notification by the MSCI, as well as the deal with Total Energies being put on hold. So Vivek is here to bring us up to speed with all of that. Vivek?
Well, that's right. So on January 28, following the sharp volatility that was seen as far as the share prices of the Adani Group was concerned, MSCI put out a notification saying that they were asking for feedback from the MSCI participants as well as the investors regarding the treatment of the Adani Group stocks within the MSCI Global Standard Index. So today, just ahead of the scheduled February index review meeting, MSCI has actually said that they would now be, after receiving feedback, they would now be looking at the weightage and how they are going to treat the Adani Group stocks. So the final notification will come, just prior to market hours opening tomorrow. But, putting this into context and why is this important? Remember, all of the Adani Group stocks, barring Adani Wilmar and NDTV, are actually in the MSCI index. So when you're talking about these stocks, especially Adani Enterprises, Adani Total Gas, as well as Adani Transmission, they have the highest weightage within the MSCI index. And these are the stocks that could be impacted more in case there is a weight reduction. Analysts believe that there will not be a deletion of the stocks from the index. Rather, there could be a weight reduction that comes along. Along with that, some other news flow in terms of Adani's partners. So French major Total Energies has decided at this point of time, following the impending audit of the Adani Group, what they're going to do is they're putting the $4 billion planned green hydrogen investment on hold, at least for now. And lastly, Financial Times also has reported saying that, the Adani Groups actually prepaid a $1.1 billion share back loan last week after facing a margin call of a little over $500 million.
All right, Vivek, thanks so much for keeping us up to speed with all that's happening on the Adani Group of stocks and the various developments there as well. In fact, here's another one. The state GST officials also visited Adani Wilmar facilities in the state of Himachal Pradesh to seek information on the company's input tax credit claims, and the company says that support was extended to the officials during that and what was also a routine inspection of the facility, the officials said. And they also stated that they did not find any irregularities in the operations conducted by the company, and the Wilmar company also clarified that they are not liable to pay tax liability in cash under the GST law. So that's one of the latest information coming in on the Adani Group of companies. With that, we'll also get you some of the big corporate voices on CNBC-TV18 today. Let's hear out the IBLA jury members, Sanjeev Mehta of HUL and Anisha of M&M, speaking on the trends in the consumption sector.
The rate of inflation will go down. But if we really have to give a fillip to consumption as in volume growth, then we have to see commodity prices go down substantially, which would then result in corporations like ours passing the benefit to the consumers. Then the consumption would come back.
And you're not at that point?
We aren't at that stage. Rate of price hike would be substantially lower. But what you would see in the price growth would first be coming in from the price increases that were taken in the second half of the last year.
We are seeing very strong consumption across all our sectors. In auto, it's driven by products that we have. Surprisingly, the farm sector has held up very well. And the growth in farm equipment, in tractors in particular, has been far higher than what we've expected this year.
There is a fundamental difference. Tractors are not owned by farm hands. Farm hands consumption is driven by wages. Yeah, and it is not that the growth is not there. If you look at the full year 22, we are still talking about the top line or the headline growth still being positive even in rural India. But for the kind of price increase we have seen, which has been unprecedented, it's also not surprising that the consumers have titrated the volume.
All right, that is some important and exclusive opinion, but we do have to get into a short break now. On the other side, we're going to get you the fine print of the January mutual fund data that just came out a short while ago, so stay tuned for that. Hey guys, welcome back. You're still tuned into Business Lunch here on CNBC TV18. Now, like we were telling you, mutual fund data for the month of January has come in and it looks up. It's above 12,500 crores, which is a sharp increase from the around 7,200 crores that we saw in December. In fact, if you take a look at this figure, you can see it's come in at a 4-month high as well. So there you have it on your screen. It's a 4-month high for the net inflows that have come in. A key positive this time is that the large cap funds have clocked in inflows of around 700 crores. Remember, this is after after 2 straight months of money moving out of this category. So that is important to note. Let me move on to the debt category now. Outflows continue here. So the figure has come in at 10,300 crores this time, with around 5,000 crores being pulled out from liquid funds alone. Now, of course, it looks much lower if you compare it to the last month chart, but December is when we actually do see a lot of quarter-end activity by corporates, so that wouldn't really be a fair comparison. Do keep that in mind. That's why you're seeing that big sort of decline in the outflows. The hybrid category has seen a move higher this time as well, so we have a figure of 4,500 crores. This is versus the 2,250 crores that we saw in December. And a figure that's quite surprising is that we have a big ETF outflow number this time. So it's come in at 1,700 crores. This is versus the 8,800 crores of inflow that we saw this time. So that is quite a jump that we've seen. Now let me take you through the total AUM managed. That has come in at 39.62 lakh crores. This is for January, and in December we saw 39.88 lakh crores. So there is a little bit of a fall here, but I will end with some positive news. The SIP contribution continues to move higher. It is another month and another record there, and the figure has come in at 13,856 crores. So all in all, a good month for the mutual fund data there.
All right, and the SIP figures are definitely encouraging.
Yeah.
Thanks, Pavitra, for those details. Let's focus on one sector then. We're talking about the fuel sector. So the year 2022 was a big year for the global oil industry. Now, in fact, the top 5 oil companies in the West registered record profits in the year gone by. But will this trend really continue? Let's find out from Sonal Bhutra, our colleague. She is here to tell us more about the year gone by and what lies ahead for the oil sector. Sonal.
Thank you so much for that. Well, absolutely. A stellar year for these companies. World's 5 largest oil companies posted record high profits in 2022, which almost doubled on a YOY basis. Let's start with ExxonMobil, which reported historic high earnings within oil producers at $56 billion, which compares with the previous record of $45.2 billion. And this is what the company reported in 2008. In the last quarter of 2022, the company took a hit of $1.3 billion in quarter 4. This is on account of windfall taxes. Despite that record high number. Then we have Shell, which reported adjusted earnings of $40 billion in 2022, which has also doubled versus 2021 levels of $19.3 billion. And again for Shell as well, the last known record profit was in 2008 at $28.5 billion. Chevron also reported a big jump in profits, more than doubled on a YOY basis at $35.5 billion. This compares with $15.6 billion reported in the last year. British Petroleum, the British giant, reported profits of $27.5 billion in calendar year 2022, against more, and this doubled more than, it doubled versus profits of $12.8 billion in 2021. French energy major Total Energies reported profits of $36.2 billion, which basically means an increase of 100% on a YOY basis for this particular company. And this is after they booked a provision of $1.7 billion for windfall taxes. Now, Refinitiv data suggests West's largest oil and gas companies have reported profits of $200 billion, making US President Joe Biden call it outrageous. And this has also led to more conversations on increasing windfall taxes further on oil production. While some oil producers are of the view that companies need to invest in the sector and transition to renewable technologies will require significant investments, so taxes shouldn't happen. But yes, in 2023, these profits are expected to decline to $158 billion. So let's see whether there will be a change in windfall taxes or not. But 2022, definitely a stellar year.
All right, definitely a stellar year. Sonal, thanks a lot for bringing us the details on all of these big oil players. But with that, we have to get into a short break now. On the other side, we have been bringing you updates on the earthquake and the rescue operations in Turkey and Syria. So we're going to get you an update when we come back.
Welcome back. You're watching Business Lunch. A quick look at the markets at this point. Yes, there is status quo when it comes to Nifty 50, about 45 points odd that is lost on Nifty 50. But Sensex has taken a deeper dip in the last 20 minutes of trade. Well, Bank Nifty is the one which is really taking the drag for the overall markets, underperforming the key indices as well. And now more than 0.5% down, 0.58% down, 236 points lost. And in fact, mid caps have also weakened from the time we spoke earlier. So advance decline ratio probably widening and markets looking on the weak side at the moment. Now let's take you through some of the global developments, and the sad one at that, the big global story of the devastating earthquakes in Turkey and Syria, and the death toll has now climbed above 15,000.